How's it going, everyone? It's Sam. Today I want to talk to you about the crypto market, talk about what Jerome Powell just said, some things you have to be careful of. Also, something that I cannot believe is coming out right now. It's so stupid. These people were so stupid, and I had my money with them, so I want to talk about that and talk about some good news in the market and some things you have to be careful of. So if you don't mind hitting the like button and subscribe button, I appreciate that. I bring content every single day specifically on the crypto market, but also some stock content as well. So hit that bell notification so you know right when I post a video. There's also a link down there to FTX US. They're one of the exchanges I'm actually moving more crypto to, as I'm moving crypto away from another exchange that we'll talk about here today. With the link underneath the video, you get $10 worth of free crypto when you trade over 100, and you get discounts on your trading fees. So crypto is down a bit today, 3.4% after a pretty good day yesterday. The stock market is up. NASDAQ's up 0.75 after opening negative 1.16%. So definitely a big U-turn. Nice price action as well. Now everyone is really watching Jerome Powell right now as he's talking to Congress. He says that they're still strongly committed to bring down inflation, and that means they're going to have to raise interest rates until compelling evidence emerges that inflation is coming down. Now, Warren did bring up the fact that they could be sending the economy off a cliff and cause a recession with millions of people out of work. And Powell says this is a possibility. It's not our intended outcome at all, but certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and a strong labor market. Now, this is a really difficult position that they're in. And one thing that I think a lot of people don't really think about too much is the fact that when they raise interest rates, it doesn't help lower the cost of some things that people are really having a hard time paying for, like fuel and also like food. That doesn't really help because that's more of a supply issue than a demand issue. No one's going to see higher interest rates and say, maybe I'll eat a little bit less this month, right? So that is an issue, but hopefully they can engineer the soft landing that they think that they can. But it is difficult because as they raise rates, obviously it becomes more expensive for a lot of normal items. And as they raise rates, it also is harder for them to pay back debts. It also causes more recessions. And this is a time where a lot of people are losing jobs and a lot of companies are cutting, right? A lot of people are being a little bit more cautious with their money. So hopefully this goes well. It seems like everyone is calming down a bit after the initial fear of what Jerome Powell might say, but it is very similar to what he has said in the past. Now moving on to what I cannot believe. I have moved my money in my crypto away from Voyager. This is a place where I held a good portion of my crypto, and luckily I haven't lost anything from putting it on Voyager. I actually got some nice rewards through the bull market, made a good amount of passive income. Hopefully that will continue to grow, and that will be really beneficial over the next 10 years as crypto gets more and more expensive. But now they just announced recently that they were getting some extra money from FTX, some stablecoin, and some Bitcoin as kind of just a safety mechanism for their clients and just to help liquidity during the bear market, essentially. Now, I made a warning a few days, maybe 1 or 2 days actually, before they announced this, that there could be some issues with Voyager, and I started to move my crypto off. Now, I moved it to FTX into Binance, actually. So we'll talk more about Binance in a moment too, but FTX was one of the main places that I put it. I am looking at cold storage as well. I'm still in the process of figuring out what cold storage device I want and some of the logistics behind that. But what I can't believe is what came out today. The crypto broker said it's on the hook for about 370 million of Bitcoin and 350 million of USDC and has asked for a repayment installment by Friday. This is coming from Three Arrows Capital. They are going to issue a notice of default to the crypto fund if it fails to make a loan repayment. So today, Voyager is down 61% on this news. They are only under a $100 million market cap now as a company. So a lot of people are pricing in the fact that they might not make it out of this. They might not be able to recover from this. And that's because they have so much on the line, and Three Arrows Capital is insolvent. So they're not going to be able to pay this back. Now, they just got a 15,000 Bitcoin loan from FTX. They also got a significant amount of USDC. I believe it was 200 million And they said that they already had 200 million on their balance sheet, so they really are just getting this to repay all the investors back that lost money from 3AC, and they haven't even come out with who's lost money from that or what they're going to do moving forward. But it seems like they're going to have a significant amount of debt now to FTX because they're going to need this. Now, they recently agreed to that loan with Alameda Research, which is tied to FTX US. I should be more clear about that. It's Alameda Research that gave them that. But this is a huge problem. And the thing that I can't believe is the fact that it sounds like they didn't have any collateral. And it sounds like a lot of other crypto companies didn't have collateral as well. Recently, BlockFi had some announcement of also working with Alameda Research and getting a loan as well. And there were people that were talking about the fact that they did have ties to Three Arrows Capital as well. It sounds like they loaned them money as well, but they liquidated them. At least that's what it sounds like. They said that they liquidated a large client of theirs. So they at least had collateral. Supposedly, Voyager and some of these other exchanges did not have collateral. So I can't believe that these kinds of exchanges that are public exchanges or even just these multi-billion-dollar exchanges got so greedy that they would just take a few extra interest rate points or a couple extra points of interest to not have collateral. Or maybe they just didn't even get that, but they just thought it was fine because Three Arrows Capital was an $18 billion fund. That's kind of disappointing, and hopefully that does not happen in the future. Of course, this can always happen. We have Celsius and Three Arrows Capital and Luna all collapsing recently, and these are all large institutions, large assets under management, large market caps. But the contagion is spreading, right? You're seeing all the companies that were a little bit reckless with their money. Now, at the same time, Binance and FTX, I think, are really coming out ahead. Some of the larger companies are coming out ahead for this, and they're gaining market share. I'm sure that a lot of people are moving money and crypto to cold storage as well. But Binance US just launched zero-fee Bitcoin trading. FTX also is giving out these loans in Alameda Research. These other, I suppose they're more related entities to FTX. These other companies related to FTX are launching loans and helping a lot of these companies survive. They're going to make money off of them as well, but they're gaining market share as well because they are really well capitalized and well funded. This is so interesting because Binance and FTX are just going to gain in popularity a lot because they are safer, in my opinion. Coinbase is also following on this news of Binance launching zero-fee trading for Bitcoin. This is, I think, good because as time goes on, these companies will continue to lower their rates on different buys and sells, just like stock apps have done as well. You don't really have to ever pay for trades on stock, so why pay for trades in crypto, right? I think that will be the way of the future, and that's always been something that people have been worried about with Coinbase. Now, moving on, USDC's real volume flips Tether on Ethereum as total supply hits 55.9 billion. So they had a real daily volume of 1.1 billion as opposed to 579 million on USDT. Now, they use this real volume metric. It's basically taking data from exchanges that believes has significant and legitimate crypto trading volumes instead of someone just maybe moving money around or posting some fake numbers. These are the exchanges that includes like Binance, Coinbase Pro, Gemini, Kraken, these kinds of exchanges. So this is interesting because so many people are worried about the USDT collapse, and I think this might be less of a problem in the future than a lot of people were assuming would happen. A lot of people think Tether's just a Ponzi scheme, and I think that they might be as well, but they are supposedly working with a top 12 accounting firm to show that they actually have reserves. And at the same time, they're losing popularity. Just like I said, the volume is switching, and also a lot of people are moving from Tether to USDC. You can see that they steadily were gaining market share and were gaining more and more in market cap for months. And then all of a sudden, about mid-May, they fell off a cliff. A lot of money was taken out of USDT, and then again, more money taken out of USDT. And then at the same time, like really at the same time, money was moving into USDC, and this was around the Luna collapse as well. So a lot of people were moving to something safer, and USDT lost peg as well. You can see that a lot of money has flown in here. So right now, USDC's $56 billion market cap is not too far away from USDT's $66 billion market cap. And at some point, I think that they're going to switch, and then it becomes even less risky for USDT to fall, right? Obviously, a lot of people that have been in the space a long time still use USDT, and I think a lot of people that are coming into the space, and I think wiser investors in general, are just using USDC instead. And at some point, I think they will flip, and as that goes on and Tether becomes smaller and smaller relative to the overall stablecoin market cap, the risk of it falling is less and less. Now, of course, it would still be devastating if USDT had some major blow up, but I think that risk is going down with time. So that's the news today. We have markets returning back a little bit of green, Powell testifying, Voyager just coming out basically showing that they did something really idiotic, just not having collateral, which is something you always need and something that you expect from your exchanges and your brokers, that they have collateral, that they're not being reckless, but they don't have that. And then at the same time, we do have the risk of the USDT collapse, I think, going down a bit. Now, let me know your thoughts on this underneath the video. Thank you so much. I really do appreciate you watching. Check out the link to ftx.us underneath the video, and I'll see you in the next one. Bye.